Hey YouTube, Ken here from the Dyslexic Investor, and we're going to be looking at a couple charts, some trading ideas, and then we're going to be looking at probably some trades or some longer term holds because of what the markets did this coming week and the lingering of the trade wars with China and then the overall news that just came out that we're putting troops in the Middle East again. So stay tuned and we're going to have a fun, packed episode. Here we go. Alright, now we're back at looking at the charts. So as we said, we're going to be looking at a quick recap of the S&P 500. We can do the futures or we just do SPY to kind of keep things a little bit more on the simpler side. You can see here, again, this is a 1 year chart. Each of these wonderful little candlesticks is exactly 1 day in the last 200 and some odd trading days in the past year. So looking here just as the last couple days, or actually the last-ish month, basically the month of August and September here. This is Friday. This is kind of a big downpull, much more than a lot of people expected. But again, we've touched the top here once, twice, 3 times. Some people call it a triple top, a triple bottom, so forth, whatever. You can kind of see here 1, 2, 3, 4, multiple times we tested 200 simple moving average, which is this little dotted line here. From my understanding and what I look at it, I want to see it hold the 21 EMA here coming Monday. But with the news of troops being deployed in the Middle East and this trade stuff is still up in the air. It could be kind of a damper on a lot of things. And so that being said, we're going to be looking at 3 stocks that I have my eyes on. Again, only one of these I have an active position in. So we're going to go to the first one. We're going to go to AMD. Again, this is Advanced Micro Devices. This is a chip manufacturer. This could be heavily tied into the China trade stuff. There's a couple things I want to point out right at the beginning. It's very consolidated and it's showing somewhat signs here on the weekly chart. So this is a 1 week. So each of these bars is 1 week and it goes back exactly 3 years. And what I'm looking at here is, again, it's staying above the yellow line. And you can kind of see here, it did not close below it. So that is a good sign for me. It could substantially go lower because you did have a couple crosses here. You had the 5 EMA cross into the 8. I kind of want to see that correct a little bit in the weekly, and then on the daily, things kind of a mess. Like this is kind of a risk off on the short-term side for me. This would be maybe looking at the 200 here for some potential buys at the 2750 level. You can kind of see here, even when the crazy December that happened last year, it broke through pretty bad and it kind of came back fairly fast from that being really tight V's. So here you see it cut and then it bounces back, cuts and bounces back, cuts and bounces back, which was a lot of kind of those common stocks that were still connected with the trade wars. So that's AMD. The next is going to be another stock that I have is Activision. So anyone who knows Activision Blizzard, they do the World of Warcraft. They have the new Call of Duty game coming out. Those are the people that create those various entertainment and video games, and I enjoy video games. I actually didn't put a video out on this, but I bought it in around this region over here, right below 50, the 48, 47 level, for this nice little punch out over here. This is probably due to many different things. That's they created WoW Classic again. The new Call of Duty game is getting great press. The beta is doing fantastic. That's coming out at the end of October. This could be a nice push higher because this stock has been stuck down here for a while, and this was cut down from the lack of innovation in a lot of the games they've had. So let's look on a weekly chart. Kind of see here on the weekly chart, it's kind of broken out of this this base right here, as I want to call it, and it's pulling up. All the moving averages are pointing up again and moving on the upwards trend. So this is a positive note. I wouldn't be putting in a full position right here and there. If you're going to do a position sizing, I would again wait for the 21 EMA to hold. If this probably decides to pull back just a hair, because this was quite a bit of run from 47 to almost 57 here, so $10 move, so it's about 20% in about 2 weeks. So that's a significant move for a company like that. So I'm going to throw in one more that actually just caught my eye earlier today, and it's got a lot of news coming out. It's Disney. So everyone knows Disney and Netflix are kind of going at it because Disney's coming out with their own streaming service on November 8th or 12th. I'll post it on the screen right now to prove it. This is a stock that I probably want to buy a very small position just to trade real fast. See what happens Monday, how it opens up Monday, and then just go from there, because this is some significant drops. And I haven't looked up any news, but these are pretty sharp red candles. I'm just figuring out this could be just from selling or so forth. They didn't have earnings or anything here. They had earnings previously, and it did okay, it looks like. The weekly chart, it did break the 21 here, which is not, this could be a break of trend, but you kind of see here it has broken many a times. So what I want to look at is that it doesn't go below a couple of these other indicators. So here, and here. So this could potentially trade a little bit lower. If it touches a 200, probably a great buying opportunity, because this stock has a lot of potential with the Disney Plus stuff coming out in the coming weeks. Then I did PG. This is a stock that I kind of want to hold long term, because again, everyone's been talking about the recession's coming, the inverted yield curves, all this kind of mumbo jumbo, and just trying to scare everyone that we're getting a recession for 6 months to 18 months from now. And a lot of people are going to yield, and Procter Gamble is a great company for yield. Like it's a staple. And you kind of see here this is a 1 year chart, and it's anytime this hits the yellow line, I'm just gonna have to buy some positions, or even if it goes to the 34. So if it's between the 21 and 34 EMA, the exponential moving average, I'm going to be buying it, and I'm going to be probably just selling puts in this. This would be a great little stock just to do that and kind of create a little bit of equity and some money over just the short term, because this has just been kind of a fantastic performer. Let's just go into a larger chart. So like ever since like what is this, 2018, April of 2018, the last 18 months, this thing has been a rocket ship, just from literally doubling in almost in price, going from 70 to 127. So this could be a sign of things that people are going to the staples like Procter Gamble, because everyone's going to need toothpaste, toilet paper, and all the other necessities. And then the TLT, which we're just going to throw that in just for a little bonus here. This is the 20-year rate. And you kind of see here, this kind of had a substantial bounce today, on Friday that is, because a lot of things have inversed in the sense of the stock market. So usually if the equities, the SPY is positive, this is going to be negative. So people are flooding to the bond market. So this is a bond market that tracks like the 20-year treasury here. So usually this is the inverse of, if equities are doing great, this is going to be doing poorly, and vice versa, if that makes sense. Again, guys, thank you so much for watching. Don't forget to subscribe if you want to see more great videos, and don't forget to like that like button down below as well. This is Ken from the Dyslexic Investor signing off, and I'll catch you guys on the flip side. Peace!